Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Welcome, everyone. This is Financial Issues. I'm Mark Minnella, your host, and joining me from the control room is Seth Udinski. Welcome,
Hey,
Seth.
Mark. Hello, everyone. Good morning. Great to be here today.
It is, and it's day 4. Now, I think you know what I'm talking about, don't you, Seth?
I do, Mark. It's day 4 of not having Sam here, which is sad.
Our good friend. Yeah.
He is a good friend. But you know what? It's given me the chance to get reacquainted with my good old friend, the audio board. So I've been grateful for that. And I feel like I'm closer to you, Mark. I know I'm not actually closer to you, but I feel like I am. So this is fun.
Well, we're going to try and make it closer come January, February, hoping to get back to the studio up there with you and spend a week at the big desk.
Yes. Yes, sir.
That'll be fun again. Well, call in now, 610-363-1110, 610-363-1110, and get in the queues because we'd really like to have you join us with your comments or questions. And we're going to be talking about a whole bunch of wonderful things today, but what's important is what's on your mind. 610-363-1110. I think you all know that by now, but if not, one more time, 610-363-1110.
Write it on the doorposts of your hearts, folks, right?
Yeah. So today we're continuing with our ins and out of year in giving. And today we're going to talk about your typical everyday individual brokerage investment account, not the qualified ones, not the Roths like we talked about earlier in the week or strategies there. But we want to talk a little bit about today how you can maximize your giving, not just give, which is, obviously giving is really important. It's part of our life. It's part of who we are in Christ, is to be a conduit of God's blessings to others. But what's really important is that we do the best we can to make that happen and to make it go further. So today we're going to talk about the standard typical investment portfolio that's not a Roth, that's not an IRA, that's not anything special, no tax benefits to it, and how to make the most of it, and how to avoid capital gains as well.
You know, Mark, that's my first question with this is when we're talking about giving out of a brokerage account, my first fear, and I'm sure our listeners share it, is taxes. I don't want to give the government all this money when I'm trying to do something nice. So tell us, Mark, what do we need to do?
I know. Well, first of all, we got to realize if we're paying taxes on our investments, it means we've been blessed by God in our investments and we've done well. So let's not get that mixed up. I have known people who just hated paying taxes so much, they'd rather just sit on dollar bills in their mattress and make money from it, and because they hated giving money to government or having to pay taxes. But as a believer, we know this isn't a bad thing. God knew before he blessed us with the gains that a part of that was going to go back to Caesar, and it will. So that's not a big deal. However, with our tax laws and whatnot, we can avoid that. We can deduct the full fair market value of an appreciated stock. So let's say you have a stock, maybe you bought a stock for $5,000 and it's grown to $15,000. If you take this stock and donate it to a viable ministry, a 501c3, you can deduct the full $15,000, not the $5,000 of your original money, but the full $15,000 it's grown to, even though you never paid tax on the gain. So effectively, you minimize your tax impact by donating the stock fully to directly to an organization, a ministry. You avoid paying taxes on the gains, and you bless that you're able to give more to the ministry because you're not taking that $15,000, ending up with 10 and giving 10 after taxes to them. You're giving them the full $15,000. They don't have to pay taxes on it. So everyone is blessed in the way this is going down. So you're maximizing the kingdom impact of what you're giving, the way you're honoring God by being a great conduit. That's really cool to think about. It's not a major strategy, but it is one that's excellent. And the way you do this, if you have a stock or an ETF or a mutual fund that's highly appreciated, you might want to blend this in with a couple other strategies we've talked about throughout the year. One is that tax loss harvesting. If you had some stocks, some mutual funds, things that have pulled back, and I know there were quite a few, or at least a handful of them, we've talked about them, and they moved from buy to hold, and a couple of them to sells. So we know there are some of those. Well, you take those, you sell them, and you use those to help offset those large gains you had from having to sell some of those huge gains you got from some large stocks that got dirty and went on our sell list. So you sell them to help offset that. Then you don't sell this stock or the mutual fund. You donate shares of that to your ministry to help rebalance your portfolio and get it back to where it should be. Where instead of one stock being 35% of your portfolio, you get it back down to 3 to 10%, depending on how far towards original allocation you want to be. But you don't sell them off. What you do, instead of selling them off this time of year, if you're still wanting to donate and give to a ministry, you give those shares. You call your broker dealer, you call your platform and say, I want to donate X amount of shares directly to this ministry of this stock or this fund. And then you call the ministry and you talk to them and you coordinate the two, and they'll transfer those shares to the ministry. You get to deduct the full appreciated amount. They get to receive the full appreciated amount. Your gift goes further, your taxes go lower, and you stay generous. Praise God. How could you ask for more? So.
That's awesome, Mark. And Mark, I'll just say this too. This is a great opportunity. If you are someone who's listening to the show and you like this ministry and you want to see it succeed, we'll gladly accept your gift of appreciated stock. There's actually a way to do that. If you're wondering specifically how to do that, like the steps for that, folks, go to financialissues.org. When you click the donate button, you scroll down. There's the donor portal that you can click on, become a soldier. But then the third row, it's called non-cash gifts, giving beyond your income. If you click non-cash gifts explained, it's a blue button there, Mark. That'll take listeners to a place where giving of appreciated stock, there's a little checklist you can look at there and kind of understand, okay, this is what I need to do. This is how I do it for financial issues. Whether it's us or whether it's another ministry. Mark, I'm so glad you said that. It is a great thing to do. And
there are a lot of great ministries. For example, last night, yesterday, my wife and I went and visited with Crossroads Kids Club. They're a partner of ours, they're a sponsor of ours, and we're very happy about that. But I got to go visit with Matt, who founded it and who runs it, and we visited a school where they're holding this at, a public school, where they're coming in and teaching Bible principles to these kids and teaching them how to love God, how to love their neighbor, how to behave, how to enjoy life in a way that honors God. It was so cool. We sat at a table as they were doing a Bible study on Moses. We watched them as they went through a recital of the whole concept, almost like a Romans road in a elementary school level, that they did action movements with their hands and stuff to live out what they were saying. And it was awesome to see this in the public school. What a great ministry. Maybe you want to donate some of that appreciated stock to them as well. Yeah, it would be well worth it.
Be a great thing to do. And folks, if you want to check that out, reachOurSchools.com is the place to go. That's our specific FISM link to give to Crossroads, reachOurSchools.com. It's good
That's
stuff,
excellent. I didn't even know we had a direct link for that. That's wonderful to hear.
There it is, yep.
Yeah. And here's what's really cool. I'm sorry to harp on this, but it just crossed my mind. One of the things Matt said to me is, when he thought about reaching kids, most churches, what they do is they have a youth group, or they have a trunk or treat, or they have, a vacation Bible school, and they're calling all the kids to come to their church to do this. Okay. Well, the kids aren't in the church. You know where the kids are? They're in the elementary schools. So instead of calling the kids to come to them, Matt says, let's go to the schools. And what they do is they partner with local churches to do these clubs, these Crossroad clubs. And then these churches provide the personnel to go in, and it doesn't cost them anything to participate in this. Crossroads provides everything. And they go to these public elementary schools, and they have these after-school Crossroads Kids meeting. And when they do that, then the kids get involved, then the parents get involved. The next thing you know, these people are starting to come to the churches that are putting these on. So everybody wins by going to the missionary field. And where, just like the bank robber, Jesse James was asked, why do you rob banks? He said, that's where the money's at. Well, why are you going to the public schools? Because that's where the kids are at. It's a wonderful thing. Crossroads.
Amen.
Kids Clubs, yeah. And we hope that you'll consider them into your giving, as well as financial issues. And we'll be back in just a little bit to talk a little bit more. There's another account I want to talk about, a new one that our president just gave us. And I'm sure you want to hear about it and how it's going to help our kids and our grandkids, for that matter. Be right back.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life, and some make life worthwhile. There are decisions to stay, or to go, to remain the same. Before investing.
Are you tired of the chaos? There are a lot of things that make noise, but only a few that truly matter. As a parent, I want to leave something that will last for a long time.
You invest $300 a month increase on slowly by the time you retire.
Not just an inheritance of money, but a legacy of godly values.
Here at Financial Issues, we want to help you grow your money, but our main goal is to help you honor God with the money that He's given you.
Invest your money in a God-honoring way. Go to financialissues.org.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Welcome back, everyone. I'm Mark Minnella, your host, and joining me is Seth Udinski. Seth, we have a new account for little ones.
Mark,
tell us about that.
We do, and I'm curious about this one, as you might be as well. I've got a little bit of a personal stake in this. It's something we've mentioned before, folks, but I think it's important to bring up again. So President Trump on Tuesday shared the details of his, what he's calling Trump Accounts program. This was introduced, of course, in the big, beautiful bill back earlier this year, Mark. These are tax-deferred savings accounts for anyone under 18. So they're modeled after traditional IRAs. They're open for contributions on July 4th, 2026, so the 250th birthday of our nation. Well, it's looking like this here, Mark.
I like that.
Yeah, I do too. Every child with a Social Security number qualifies, and babies born between January 2025 and December 2028 will get a $1,000 government kickoff deposit. That does not count toward the $5,000 yearly limit. So for my kids, unfortunately, the two older ones are up the river without a paddle, but Knox is going to be rich, Mark. He was born in 2025, so that's how it goes. After the child turns 18, the account is treated like a regular IRA. So, the Treasury officials say that the accounts with full contributions could grow to nearly $2 million by age 28. Per the IRS, quote, the funds in Trump accounts must be invested in certain mutual funds or exchange-traded funds that track the S&P 500 or another index of primarily American equities. So, Mark, my first question for you is, what do you think about that? Obviously, the S&P 500 mutual fund would be pretty dangerous for us, considering the definitionally biblically responsible. But what do you think about this?
Yeah, I'm glad they threw in the language, another index of primarily American equities.
Yeah.
Well, that index could be one that the Timothy plan has.
That was my question. Could it? Yeah,
Sure.
could it be a Timothy?
Yeah.
Yep.
Yeah, absolutely. But we don't have clear definitions on this, and that's something that needs to be brought up to the president and to the Treasury to let them know that they are excluding Christians if they don't do this, if they don't make it so that we could use, say, the Timothy Plan ETF, the small cap ETF, or the core mid large cap. Those are really indexes. And they're rebalanced twice a year, I believe. So that is important to find out if we could use those in that. If we can't, my goodness, how would we invest in it? And how would our children be able to participate in this great idea, actually?
Yeah.
So we need to get clear definition. We also need to get some clarity on contributions to these type of accounts. Are they tax deductible if you itemize like a traditional IRA or not?
And Mark, what I've been seeing in my research is I'm not sure that Trump and the administration knows that yet, because I don't know if they've quite had it figured out. I should note this, Mark, that government seed deposit of $1,000, that's only for children born between 2025 and 2028. Other kids under 18 can still have a Trump account. They just don't get the $1,000 of taxpayer money or free money, if you want to call it that.
Yeah, well, yeah. I like both of those. The idea of putting $1,000 in and then letting it grow. There was a gentleman, I can't remember his name now, but in the early 80s, I think it was, late 80s, early 90s, that wrote a book about the idea of making your children millionaires by opening up an account and just putting in $1,000 a year or something like that. And by the time they reach 65, they'd be millionaires. It was based on a bunch of numbers and stuff, but it made total sense. And this is a great way. Imagine if everybody did this, every child that was born, if they were able to put in $5,000 a year for their children up until they're 18, I guess, and then the children, unfortunately, would have control of it at that time. Is the only issue. There's going to be a lot of red cars bought 18 years from now.
No kidding. Exactly right.
Yeah. But I mean, what a way to help in poverty, to help people retire, to help people save. I mean, this is so much better than what Social Security would be.
Mark, I'm with you, and you said it, not me. So I'm not gonna say anything more about it. But I think you're exactly right, Mark. So, Mark, I think the next question that I have is this a good way to grow money for little ones, or like we've talked about before with an UGMA UTMA with a 529? What's the best way to do it?
Yeah, that's a hard question. Like we started this off, we don't have clarity on all the specs on this yet.
Right.
When we do get those, we'll be able to tell. This might be a great way to go. If the age of ownership can be put off for a few years, possibly, if there are some things written in, like for health reasons or educational reasons, they can use the money without penalties for early withdrawals. Just like a regular traditional IRA, you can use it for medical. I believe there's exemptions for pulling money out of an IRA that allow you for medical emergencies and for some educational purposes. So once they get all that straightened out, we'll see, and we'll make a decision on it then. Right now, it'd be all speculative and just taking up airtime, really.
Sure. Well, no, that's definitely good to know, Mark. And I'm sure it's something we'll be keeping an eye on as that 250th birthday of the nation comes closer, because that's something we can talk about there for sure. As more news headlines come out, folks, we'll keep an eye. I know many of you, like me, probably have either children or grandchildren who were born last year, or maybe you're expecting, or one of your children is expecting, and so you're thinking, hey, they're going to fit in that window of starting that account and having the $1,000 there. So we'll be keeping an eye on that for sure.
I really like the pace that Michael and Susan Dell set with this as well.
Yeah, Mark, what's going on there? Because I found that rather interesting too.
Yeah, the note that I got was that Michael and Susan Dell donated $6.25 billion to the program this week, and that comes down to what they asked the government to do was for the first 25 American children aged 10 and under living in zip codes with with incomes below $150,000.
Which, if you listen to yesterday's show, Mark, some people are saying that's below the poverty line.
Right. Right. Will receive an additional $250. It concerns me that, I get what they're trying to do. I love that. I love that they donated this money. I love the pace they set. What I didn't realize was that people could do that. Imagine if other corporations or individuals like Bezos and just anybody who has tens or hundreds of billions of dollars, if they could donate into this and fund these for the children coming, even if they restrict it to those who have incomes of less than $30,000 or $50,000 or whatever, it doesn't matter. I love the idea that they're doing this and they're opening it up. That also makes me think that these will be deductible. When somebody gives $6.5 billion, there's a good chance it's deductible.
Yeah, good stuff, Mark. Well, we have a question actually that's kind of related to this. Jim, who's 71, is asking a good one, Mark. You want to tackle this one here? He's saying,
let's go for it.
He's saying, hey, Mark, if I want to invest some money for my grandchildren with growth being the main objective, would it be a good idea to use Timothy ETFs? And if so, which ones should I use? Thanks for all you do. God bless. Jim, I'm in your exact situation here, brother. I'm waiting to hear Mark's answer.
Well, Jim, if you're a partner, I believe you are. One way you could do it is just to go into the Partners Hub and go into the asset allocation, take a look at that. If on the other hand, you don't want to just set up a portfolio under a typical allocation like that. You just want to get a little bit aggressive or whatever. I'm not sure what your tolerance is, but I think you could just follow the allocation. And I think the recommended allocation is like 10% of the Timothy Plan International Fund, 25% of the Timothy Plan Large Cap, 45% of Timothy Plan mid-large cap core, and then I think I'd also throw in about 20% of the Timothy Plan high dividend fund. So you could use just the ETFs alone to do this and come up with a great asset allocation, and then just keep contributing to it in those amounts. When you put a dollar in, 10 cents goes to TPIF, 25 cents go to, and so on and so forth.
And, Mark, one thing that you had told me, too, is, not to overlook those small cap stocks, too, because there's some opportunity there.
Well,
the small cap, ETF. I think was a TPS. I think it is. Yep.
All right. Yeah. You can, if you want to get more aggressive, I'd throw that in. It's because it is a core too. It's like an index of small caps that are clean. So you could throw that in too. Take a little bit, maybe 15% of the TPMC and move it over to TPSC. Just go into the Partners Hub and look at the allocation there. It'll give you the allocation into each of those asset classes, and then you can just look up the ETFs that go along with it. ETFs are good because they have less expenses, so I love that. It's a good fit. I love your desire to get things started for your children.
Yeah.
I would suggest, if you haven't already thought about this, take the time to explain what you're doing. Sit down with the kids and say, hey, we're opening up an investment account, and this is why we're doing this, and this is why we're investing this way. They'll understand investing very comfortably. Most children get, I'm putting money away for the future. What most kids don't get, and because nobody talks about it, is how important it is on how you invest and where you invest, because every dollar either is an act of worship or an act of rebellion to God. Once they get that, their brain's wired for all sorts of thoughts, where they shop, where they work, and all sorts of things. So you'd be blessing them abundantly by doing this.
Mark, I've had a wonderful time explaining to my kids, because they're in, they're invested right now. We're building out the fund model for each of them, each of the two older ones, because they can't get that $1,000 of seed money from the Trump account, so they got to do it the old-fashioned way. But it's been so cool getting to explain it to them and have them beginning to understand. Okay, this is what Timothy Plan does. Like, they recognize who Timothy Plan is, that they do biblically responsible investing, meaning they're not investing in demonic, evil things, and it's an amazing thing, Mark. It really is cool. I was just going to say, this too, Mark, for Jim. Jim, you might consider figuring out which model you want to go with, because I assume you'd probably want to go with a growth model, but if you want to stick with Alt Timothy, maybe the fund model, Mark, because that just makes it a little bit simpler.
Yeah, exactly. And what's really great about this is it's so biblically strong. I mean, the Bible tells us a good man leaves an inheritance to his children and his children's children. You're following that in the old biblical sense, in the sense that while your children are alive, you're moving their inheritance to them and training them up on how to utilize that for God's purposes, to his glory. And one of those purposes, obviously, is to help your children and their lifestyle, but for them to understand how to invest, how to make money, how to live in a way that's God-honoring. You're mentoring them now, and that's what stewardship's all about, and that's what financial issues is all about. And if you continue doing this, your children will grow up just honoring God in ways that you never thought could happen. It's a wonderful thing. Thank you so much for considering this and being a partner here with us. If there's anything we can do to help you, to help them, just let us know and we'll continue the conversation. And we will continue this conversation on the other side.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That he loves all of us. He died on the cross to pay for our sins. That he will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachOurschools.com.
Tony is calling from the great state of Minnesota.
Hi, Seth. I've been a partner for probably about 6 years, and I've been a monthly soldier for probably about 5. I wanted to talk about the value of financial issues. A full-service broker was managing my portfolio for a number of years, and I was paying them 1% of my portfolio value for all the things that they did for me. The things that they were doing is pretty much the same thing as Financial Issues is doing, as far as stock picks and asset allocation and live advice. The idea that you're only charging, $135 a year, that is ridiculously low when I was paying 1% of my portfolio value. So I think everyone, all the partners, should be a monthly soldier.
Thank you for standing with us, man. It's an honor to stand shoulder to shoulder with you, brother.
Invest without compromise. Go to financialissues.org to get started today.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant, and my family, they were like, no, you're not having this baby. I met Miss Linda. She told me about all the great resources, like they offer free baby clothes, they offer free classes, stuff for her mom. She prayed with me. She told me to ask God to, guide me to my decision. She made it completely like my choice. She offered to get me an ultrasound, and I found out I was 6 weeks pregnant. That's where I very first heard the heartbeat of my son, and I was sold. Whatever I gotta do, whatever comes my way, I'm just gonna, have this baby. It was really a great thing that I was led to the choice to keep on.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Welcome back, everyone. It's Financial Issues. The number here is 610-363-1110. We'd really love you to join the conversation today. I was thinking during the break, and Seth, please forgive me for this, but what's the worst gift you ever received for Christmas?
The worst gift I ever received. Wow.
Yeah, I know. You may not want to say it on the air because they may be listening.
I don't mind. I don't think the people who gave it to me are listening. I've gotten some gifts, Mark, where you can just tell like this was either bought at a Goodwill or it was dug out from the back closet and they like cleaned it up and wrapped it and said, "Here, this is a new shirt I got you." Meanwhile, they'd owned it for 5 years, and you can just kind of tell. So I've gotten that from certain family members, but listen. I'm a thankful guy, so it's it's tough to
even that's cool. I remember I remember as a kid. I don't know about any bad gifts I've ever received, but I remember as a kid I bought my dad a can of shaving cream.
Nice.
I mean, as a kid, a little bitty kid, like below 10, I think I was probably like 6 or 7 because I thought it was so cool. He shaved, and so I thought he thought it was cool that he shaved. So I bought him, and I remember I can see him when he shaving cream. Why? Thank you, Mark.
Well, Mark, isn't it funny? That whole idea. I mean, I can remember the same thing of getting gifts for my parents, and it's like it's kind of silly when you think about it because I'm not actually spending my money; it's their money. They buy it and then they give it to me to give to them or to give to someone else. It's the same thing I do with my kids. Like, I'm going to take them out to get a gift for Megan sometime soon here, and we're going to buy it, and I'm going to plan for it to be from all of us. They didn't work for the money. It's not like it's their money.
It's just like our Father in heaven.
Exactly.
He gives us the money to put in the plate, to give to the church, to donate to other ministry. Our Fathers makes that happen. Yeah. Speaking of giving, what's the market doing for us right now?
Yeah, so the market was giving yesterday. Not really, but it was slightly positive. They were ever so slight. So we had some disheartening job numbers yesterday, Mark, for November. Yeah. But then in the afternoon, they continued to stay strong. So by the closing bell, the Dow Jones was the winner. It was up almost a full percent. S&P 500 was up about 0.3. NASDAQ up about a 1/6 or a 1/7 of a percentage point. This morning, let's see what they're doing right now. It looks like the markets are slightly positive this morning as my screen refreshes here.
So they're brushing off the bad or the report, the jobs report that was slightly bad yesterday. And maybe that's because it may lean towards another discount of the interest rates, the overnight interest rates, which people would like to see. And that'd be good. You never know. You never know the reasoning for it. I think a lot of people are just stabilizing a little bit more in the market. That's one of the things we're going to talk about in our afternoon meeting today. Our partners call in. We're going to talk about the economy and the markets and why they are doing what they're doing and what we're expecting and those kind of things. So I hope as a partner you've got the number and the invitation. And if they haven't, how do they get that?
Glad you mentioned that, Mark. Yeah, two ways to do it, folks. Check your email, number one. If it's not there, check your spam folder. If it's not there, just go to the website, go to the alerts page, and under the alerts page, you should see the conference call alert. It has the phone number you call. That doesn't change from each conference call. The access code does to protect partners. So phone number and access code. You dial the phone number, you dial that access code. You probably won't hear anything for, if you dial a couple minutes before the time it starts, and it starts at 3 p.m. Eastern today. You'll eventually hear either Mark or myself address you, and then we'll get right to the conference call. It's today, 3 p.m. Eastern time, 2 p.m. Central. So that's 1 p.m. Mountain, 12 p.m. Pacific for those listening on the western part of the country. I do hope that all of you will join us. Mark, it's going to be a great time and really, really good information on these. So join us today.
Yeah, good. Along with some information about the ministry, some things that are going on. You'll want to join us today.
Absolutely. And Mark, there's some exciting things going on that we want to bring everyone up to speed on. Just really it's a good time. It's a good time for the ministry.
It really is. Look forward to it.
Yeah, absolutely.
And I look forward to getting to some questions today. Why don't we dig in?
Yeah. Let's do it, Mark. Let's start with Gary. Gary's 71. He says, "Hey, Mark, this is a statement more than a question to the edification of your listening audience." Gary, thank you for that. That's great. He says, "I remember Shanna saying that callable CDs of 1 year or less were relatively safe from being called. I just had a bank call on a CD that matures in February of 2026 with interest rates dropping. You might want to revisit this topic." It's a good suggestion, Mark.
Well, it is a good suggestion because remember, Gary, the key here was interest rates. If interest rates are falling, or if they're rising, will make it whether they'll be called or not. Obviously, with interest rates falling, banks want to refinance their debt. That's what CDs are, their debt. You are lending money to a bank. When you buy a CD, you're actually lending them the money. They take their money and they lend it out 100 times over and over and over again, that same money. It's the velocity of money, something you might want to look up sometime. Very interesting. But anyway, what you do, they want to reduce their cost on their money. So what they do, anything they can call, if they had a CD at 6% and they can now borrow at 3%, of course they're going to call the 6%. So I believe Shannon was right on that. As long as interest rates aren't falling, they probably wouldn't be called. But now they are called because interest rates are falling. So now's not a good time to be in any CD that has a call feature on it. It'd be better to not be in a callable CD. And I don't think the rates are that different anymore with them because the rates have come down and whatnot. So, Gary, you nailed it, though. Now, I have another question. Gary is from Florida, I believe, age 71.
I believe so.
I knew a Gary from Florida who raised bees and who had the best honey I've ever tasted ever in the world. If this is you, Gary, please let me know.
Yep, be great. Yeah,
right
Gary,
back in and let me know.
Actually,
or call in.
You could call in right now. Phone lines are open. You can call in right now and let us know if you're the Honey Gary, the famous Honey Gary.
If you're the Honey Gary.
That's awesome. Hey, Mark, a follow-up question for you here.
That sounds like a Paul McCartney song.
It does. Yeah, it really does. Yeah. Callable CDs. What is a callable CD, and how is it different from a non-callable CD?
A callable CD gives the bank the right to say, okay, we're not going to play anymore. We're going to give you your money back, and we don't have to continue paying you the interest on it anymore. So let's say you had a $100,000 CD. They were paying you 6% on it, and then interest rates dropped in half, and now new CDs are only paying 3%. They could say, we have this call feature, which allows us to no longer pay you the interest on the CD, so we're going to give you your money back, and you can invest it in a new CD that only pays half as much. So callable features are a protective feature for the one borrowing, the banks, not for you. That's the bottom line on it.
That's good. Thanks, Mark. Hey, a quick headline here I'd love to get your thoughts on, Mark, okay? So President Trump on Sunday told reporters that he is going to pick someone to replace Fed Chair Jerome Powell when his term ends in May. And sources are saying that it's going to be White House economic advisor Kevin Hassett as the front runner. Now, neither Trump nor Hassett has confirmed this, but Hassett did say he'd be happy to serve if he's chosen. Mark, what do you think about Fed Chair Kevin Hassett? We've come down pretty hard on Jerome Powell. It's a tough job. What do you think about Hassett, though?
Well, Hassett is so steady and calm. I think he'd bring a calmness to the Federal Reserve that is really needed, and to the U.S. economy. Just the way he speaks. Have you ever seen him get all excited and crazy like others? No, I haven't. He's always just really level, just really calm, and he's got a great voice for that. He's a highly respected economist. He's a real world. He has real world policy experience. This isn't somebody he's just thinking about. And he's very steady. I love that. So a calm communicator in uncertain times, that's a trait markets will appreciate, low drama. So I think it's a good idea, especially with his background in the economy. I think it might be a really good idea.
So, Mark, what is it that makes a good Fed chair then? Is it someone who just is able to be calm, cool, and collected, or is there more to it than that? Do you have to have some economic knowledge? Do you have to be a politician? How's it work?
Of course, you should have economic knowledge. Being a politician, I think, is one of the worst things you could be, to be a Fed chair, actually. The chair receives one vote, just like any of the other people on the board. And that seems like you wouldn't have that, but they have such influence. And they guide and they kind of lead the discussion. And with his calmness, his steadiness, his insights, his world experiences, I think that he would be great at that. Clear, consistent, disciplined communication is something we really need instead of the gobbledygook and the political stuff we've been getting for the last 8 years.
So, Mark, hopefully, Trump's track record of picking Fed chairs is not great. He's only picked one, but it's Jerome Powell. So hopefully he gets this one right. If it is Hassett or whoever it is, I totally agree. Hopefully it can be someone to bring some stability there.
I hope so, too.
Yeah, definitely. And, Mark, one other thing we'll be keeping an eye on as well as it comes to the Fed is what comes of this Lisa Cook case as well. I believe that the Supreme Court is going to make a decision in early 2026 if Trump can fire her. So we'll have to see, what comes of that.
Yeah, we'll see. That's been dragging on for quite a while. But we'll see. We'll see what happens there. But, we'll see a lot of things come up with the new year. One of the things that I like is the idea of having a chair with a willingness to make difficult, unpopular decisions. Making the right decisions even if people don't like it. That's what we need as a chair, not a politician like we have now. If we have that, that'll keep things going smoother for all of us. And we'll be right back after this short break. The number is 610-363-1110.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. I became a partner with Financial Issues, and it's been one of the best decisions I've made. Invest your money in a God-honoring way. Go to financialissues.org.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back, everyone. The number is 610-363-1110 if you want to join in the fun and the party with Seth and I. I was just thinking, Seth, we're having less phone calls today. I wonder if it's because Sam's not here.
I think it must be. People are like, why would we call in when Sam's not there?
Sam's not there, yeah. That
Listen,
must
folks.
be it. But we have a lot of questions anyway.
We do have a lot of questions. But I'll say it one more time, Mark. If you want to get into the show today, why wait until tomorrow? Call in right now. The phones are wide open. You got to wait 23 more hours to hear actually, you only have to wait about 6 hours because we do have a conference call later today. But then after that, you have to wait another 13 or 14 hours to listen to us again. So call in. 610-363-1110. But you are right, Mark. We got a lot of questions to get to.
So let's dig in.
Let's do it. Let's start with David. So David is asking, is there a tax advisor or company that you endorse? I'm about to make a decent amount of money, and I want a trustworthy source for advice. I am also considering becoming a partner, but I don't know if I want to invest in anything, even biblically responsible investments. What would you have for David, Mark? He doesn't.
Well, that's an interesting question. Yeah, and congratulations on coming into a good amount of money. Praise God that the Lord sees fit to do that for you, and I'm praying that He will equip you with the wisdom on how to utilize that money for His purposes, to His glory. Now, when I say that, some people say, "Well, Mark, every dollar He gives us isn't for His purposes." Yes, it is, because one of those purposes is to help sustain you and your family. That's one of the reasons God entrusts us with some of His asset, is for us to care for ourselves and others, for Him to care for His people, bottom line. But then it's also to be a conduit to others. It's also to create jobs. It's also to do all these things that bless other people as well. So regarding the tax advisors, we don't typically endorse specific tax advisors or other investment advisors or anything like that, mostly because every state has its own tax laws. It makes it hard to have a counselor an advisor in every state to be able to do that. So what I would suggest is to make sure you just do your due diligence. Look closely for a tax advisor that's worthy of your business. Look for a fiduciary mindset, someone obligated to act in your best interest, not just fill out income tax forms or create billing hours. You want somebody who really understands capital gain events, business income, real estate transaction, multi-state income. If this money's coming from multi-states or you're doing business multi-states. I'd also say you want somebody, when you sit down with them, that you believe that they are communicating clearly, and not just trying to talk over your head or around you or to make you think that they know more than you. Their job is to be your counselor. And finally, with the term counselor, I'd say you want a Christian person, someone who understands your worldview, someone who will help you understand what it means to invest with biblical integrity, who will help you understand that this is not biblically sound, even if it is legal, that this is not in line with God's purposes or His glory. You want somebody who will stand firm on that and help you to walk that road. Regarding becoming a financial partner, I wouldn't wait. I know this sounds a little bit like I have a conflict of interest here, but here's why I wouldn't wait. And it has nothing to do with financial issues, receiving $132. It really comes down to, now's the perfect time to get in, start learning what it's about, what it means to invest, how to invest, what's the difference between long-term, short-term investing, why is asset allocation so important, when is it okay to step outside of asset allocation, how do you know when it's time to start building up cash instead of reinvesting. All these kind of things you can learn from this partnership, as well as start playing around with the tools in the background, going through all the videos, helping you understand the importance and the impact of investing with biblical integrity you can have. Then, and you can be watching our buy list and our broad list and following along and seeing how we do it and what's going on. Then when you are ready, you'll be able to jump right in. And that's that prepares yourself for that. There's a Proverbs 15:22, I think. Without counsel, plans fail, but with many advisors, they succeed. Well, we want to be your advisor. That's the bottom line on financial issues. We want to help you do the best you can with what God has entrusted to you. So, I would say don't wait on the partnership. Jump right in, and that way you'll be able to participate in things like the Partners Call this afternoon, where we go more in depth on the economy and the markets and what's going on in markets, sometimes on specific stocks and ETFs and funds. And you also learn more about the concepts of stewardship, stewardship is so important. We teach stewardship here. Stewardship is realizing that everything is God's, and we're to use everything for His purposes and to His glory. And we help you learn how to do that in all aspects of your life, not just financially. So, join us. We'd love to have you. Thank you for your thank you for that question.
Yeah. You know, Mark, it's great that David is considering becoming a partner. The last thing I'll say about that, Mark, is, you know, David, for you may spend the same amount of money on a financial advisor for an hour session that you would for a year's worth of partnership with us. Just consider that. I mean, it's very, very cost effective. And I totally respect, though, you know, you might not be ready to invest in anything. That's okay. Maybe just get the partnership anyway and pretend, okay, I got $2,000 of pretend money. I'm just going to try the partnership out, throw it at this, see what it does. And then once you're ready to do it, jump right in. So it's good stuff, Mark. Yep. The next one here is Dave, who is a partner. So this is a different Dave. He's 59. He says, Mark, what's the difference between that's ETPI and ET? So they're the same company. Is there a benefit to one versus the other? So Mark, he's asking about the preferred versus the regular stock. What would you have for that?
Well, the difference is the P and the I.
There you go.
That's it. No, the difference is preferred versus common. They're two different stocks. They may have the same company behind them, but they're two different issues, and that's really important. Preferreds act more like an income generator, more like a bond than like a stock, and common stocks are there for the growth. So you have preferreds act more like income generating loan instruments, and then you have the common stock that provides just long-term growth. So two different pieces. So you'd use preferreds when you're doing an income type of portfolio. You'd use the common stock when you're doing a growth portfolio. Or if you're doing a growth and income, you just use both. There's nothing wrong with that either. So yeah, that's the difference. I hope that helps. If you need more clarity, well, then you can call in at 610-363-1110 and we can go deeper. So again, bottom line for income, preferreds like ETPI, and for growth and long-term growth, ET common stock.
It's awesome, Mark. We got a great comment here from Kevin. This is not Kevin Hassett, although I wish it was. This is Kevin, who's a partner with us. And he said, just a comment this morning. So this is from a couple days ago. He says, with my schedule, I rarely get the opportunity to watch or listen live. But with the new format with Mark on board, I'm really enjoying it. And I look forward to watching the show later each day. I've been a partner for quite a few years, and you're a blessing in my day. Well, Kevin, you've blessed us with that encouragement. That is great.
Yeah, I don't even know how to answer it. Thank you. You know, you'd think it wouldn't matter, but it really matters to us that we are actually serving you well, and encouragement like that helps us to know that we are. Thank you. We're just here to represent the kingdom of God to Wall Street and to the finances, and to help everyone be the best steward possible. Thank you so much for that, Kevin.
It's awesome, Kevin. Last one of the day here, Mark, is coming in from Shannon, 56. She's been a partner for many years, and she's looking for advice on what 4 to 5 funds through Timothy plan you would recommend for someone who wants to invest for strategic growth and is risk tolerant. She's got a Roth she's contributing to and a traditional IRA. So similar to the question that we answered earlier in the show, Mark.
Yeah, it really is. It's very similar, except for a little twist here where she says she's risk tolerant.
Yeah.
Well, she says she has risk tolerance. How did she? Well, anyway, what I believe she meant is she's not afraid of volatility in the market.
Right.
And that's okay. Well, one of the original fund, the TPLNX, a Timothy Plan Mutual Fund, Small Cap Value Fund, that's one of the funds I really like for long-term investing. I definitely would throw that in there. Your TPSE, the small cap ETF, some say it's more aggressive than TPLNX, but because it's a broader small cap exposure. But I really like small caps because over the long term, small caps outperform mid, large, and others in general. I know you don't see that much in the news because for the last 5 to 8 years, small caps have not been the dominance. But historically, if you take any 10-year period, small company stocks outperform mid, large, bonds, everything else. And there's no 10-year period that I can recall. If you invested in it for 10 years straight and didn't worry about it, that you could have lost money in small caps. So even though they're very volatile, they are a good stock. There's also TPLC, the Timothy Plan Large Cap. You have the Timothy Plan Israeli Common Funds. All these would be good for you. and the International Fund. So thank you for asking that question. Especially thank you for asking about Timothy Plain Mutual Funds, because they invest with biblical integrity like you and I do, and like all our partners do, and like we'd like to get the rest of the world to do, so we can impact the society for good, to see the change, to see the ripples of righteousness and wonderful things ripple through the society. And we'll be back tomorrow to talk more about this and answer your question. So God bless you, and thank you for being with us, and thank you for investing with biblical integrity.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FIS